The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon Eastern Time at 877-927-6648. Now, what are we looking at? Aren't we looking at exactly what happens in a bear phase? Well, the day is young, but certainly Friday's move to the S&P all-time high and failure suggests if there is a very strong double-digit to maybe a triple-digit down move today in the Dow, strong move in the close down in the S&P, followed by a weak session on Tuesday, that we will see the volatility index continue to rise and the market continue to drop. Make it as simple as possible. Volatility index in the 16s, where is it now? Oh, 16.01. Is it negative? Going into the higher teens will sustain the down move. Pulling back towards the 15 and a quarter, 1490 area says, hey, just a rotational correction. We aren't ready yet for the big one. So in the meantime, in my opening call, it's my daily service, I've been warning, and we've been pushing the downside with our shorting as well. Remember, we went short the IBB, just a couple of points off the top. It's having a very poor day today. That is, in fact, very close to some kind of support where it should get a decent bounce. Excuse me. I actually thought the bounce would occur today. We haven't yet had that bounce, but that IBB is at 233, down 12. Oh, my goodness. The BIS, the 200% long, no, 200% short, the IBB is up at the 1830 level. All right, let's continue. The Dow's down 60 at 16,242. The S&P is down 14 at 1851. The comp index is down 81 at 4194. Let me move this a little bit here. You've got, real quickly, you've got, the cyclical index. Look at that. Failed to make a new high. Let me move this 120-minute chart. Made a peak E-top with most of the other indexes on the 7th of March at 1518. And a weekly is in a peak, a possible peak F. We won't know. I need to wait the entire week out. But the MACD seems to be, remember I did the MACD and stochastic workshop for subscribers and trial subscription subscribers. And this shows you that the MACD is deflecting low. Remember deflecting, bouncing away from that red line? And stochastic is at 81. I want to see if it closes the week under 80%. Weekly charts, monthly chart still looks great. So this is the MS, Morgan Stanley Cyclical Index, very important index. Let's go to the Qs itself. The Qs are down sharply because of the NASDAQ. There's so many biotechs in the NASDAQ. It's at 87.45, down 156, down $1.75%. The Dow's only down 39%, and the S&P's down only 81%. Very interesting. And a peak D in the weekly. This is serious stuff because this is a real failure in the Qs in the weekly chart. Monthly still looks great. Well, it's turning down, but the month isn't even finished yet. Daily's terrible. Sell mode in place. If this keeps up, then the weekly will give a sell signal, almost a sell signal to sell mode in 1 week. That'll be very interesting. So let's continue. We've got gold. You remember I said I just don't like gold. I think gold is done for now on a daily basis. I wasn't sure about the weekly chart because the weekly chart was still holding very well. And right now, you've got gold down 25 at 1311. Darn, I should have bought the DZZ. This is the beak part of that pattern that I was looking at. It's also the Eiffel Tower part of the pattern. It's also the uppercase A part of the pattern. We're going to be watching this very, very closely. And the weekly is giving back much more, but the MACD is still good. Stochastic still at 84%. So how the week finishes for gold is going to be very, very important. Monthly is not good looking at all. But remember, I was looking at the H pattern becoming an M pattern in gold. I did say I thought there was a chance you could go to a C and then fail without going to a D. I don't know yet. We do not have anything in the gold sector in my opening call. We're just basically staying with shorts. Gosh, we just missed adding a short this morning, which would have been great. We've got some longs. One of the longs is doing very nicely, and another long is now about to fail. Is that taken out? I think it is. Oh, that was a mistake. All right, so, okay. Now what we're looking at here is the Dow's, sorry, not the Dow, but the silver K. Let's go to the K. I think K is what we're trading. The K, that is May. May silver is down sharply. This is just a horrible chart. Even the weekly is not looking good. I don't think gold can move much higher if silver's not going to be moving. Look at high-grade copper. I've been making a big deal about this high-grade copper for quite a while. It's just stuck. It hasn't pulled back very sharply over the last few days. It's been stuck in this range. And what I did is I drew a circle. And that circle is essentially just giving you the parameters for the upside and the downside. And it says a break above 2.996 is very good for the continuous contract. A break, that's the high of the 19th of March. That same day saw a low of 2.877. Break that on the downside. That's very negative. That's the inversion of the Stork Lake formation. We want to look at bonds. Right now, bonds are trading at 132 and 30 seconds, up 930 seconds. This is going to be very interesting. Why? Because when you're looking at bonds, the TLT, which I think is really important at this particular stage, needs to clear the whole 109 area. If bonds can go to 108.86 is the weekly 200-period moving average. 109.18 is the high of the week of the 7th of March. The week of the 7th of February is 109.34. If bonds clear 109s as resistance and goes into the 110 area, this market becomes vulnerable, more vulnerable. Why? Because we will then see money transfer from migrating from stocks to the safety of bonds. All right. Two other things. We want to look at see how the dollar's acting. At 80.17, up only 7 cents, having not made leg C. Well, the day's young. I suspect it'll still make leg C above 80.83. I'd mentioned just 3 days ago, that if the dollar was not able to clear 80.72, that's the dollar index, just clear it. I mean, just go straight into the 81s. From this area, when gold is pulling back so sharply, it forces me to reinstate that mantra that I've been saying. The Fed wants a lower dollar, and it's whack-a-mole, bap, 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 bap on the head every time the dollar tries to perk up. The Fed just won't allow it. In fact, I wouldn't be surprised if the dollar's having a very good rally, but you can't see it because it's on quicksand. Peak E in the weekly chart and the daily chart, peak E in the weekly chart, leg E in the monthly chart of the EUR USD. The dollar, the euro dollar pair. Sorry, I was busy looking at something else. Currency pair. And what's very important about this, if the euro starts to take out the low of 1.370, it's at 1.377 in the next 2 days, that'll suggest that it's going to close the week under the 9 EMA and that we will have seen a peak E, fairly significant time and price move to the upside as it consolidates. I think I'm done there. 877-927-6648. Love to take your calls. Let's look at a couple of things. In the where did it go? In the 2-minute chart of the E-minis, there was a peak D made at 1866, round number high, at 9:34 this morning. Nice rally up and poof, comes all the way back down. Now it's trying to form some kind of a base. The 120-minute chart, look at this. Just want to show you something with the, right here. Something with the chart formations based on the Chapman wave methodology. That rally on Friday to 1876.75 underneath the 1880.50 high of the 7th made a cup formation. And in the cup formation, my rule of thumb is if there is a pullback and it goes to 1/3 from the double top below the previous high of 1880.50, so somewhere around, I would have said 1861 on the pullback, which it's doing today, that's a negative, and that says there's a good chance that you're going to retest the low of 1823.50 of the cup formation. So this is the way I'm looking at the market right now, that the upside is becoming very limited, very selective, number one. Number two is that within the context of chart patterns, the weekly chart is still only in a sideways range pattern. If you look at the NQM, that's the June NASDAQ futures, that broke the 9-period moving average support. That deflected lower in the MACD. That has pulled back from over 80% in the stochastic to 73%. And the daily is making an A, B. This is leg B. Excuse me. Leg B to the downside. And you've got low lows and lower highs. That's the pattern that I'm saying we've got to be aware of. Let me just go to this chart right here. I put for my subscribers today, are we here? I'd written, are we here over there? In that leg B, on the 21st of January, went to 16,520 and then failed. Well, what happened is on Friday, you went to 16,456 and failed. But that's just one day. You need a candle like we're looking at now. The only problem is we're only 2 hours, not even 2 hours into the opening of the week, let alone the day. So all I can say is what you would expect is that by tomorrow, there's further downside action, and the low of 16,160 to the low of 16,126, that Roman candle that I looked at back from the 19th of March, those are the areas of support that have to hold. A failure would be very negative. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Investors, Taz Market Research delivers to its subscribers expert commentary on the analysis of 15 different markets each day. Get this invaluable and timely information through the daily market research videos Taz Market Research produces each day before 9 a.m. The video analysis will include reports on currencies, interest rates, indices, metals, energies, grains, and more. You'll be able to gauge where high profitability setups are in each of the markets. Receive a free 2-week trial subscription to Taz Market Research videos on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi folks, Basil Chapman. We are back. Dow's down 50, S&P's down 12. And let's see here. Needed to do a couple of things. I just wanted to... all right, here we go. Okay. What we're looking at in terms of this chart that I was looking at, you see the MACD, the green line is just, I wonder if you can see it better on this chart here. In the Dow, there you go, INDU. The MACD is in fact showing you that it is deflecting lower. And there was a high volume reversal on Friday. I usually watch those quite closely, but it has so far deflected lower, and the stochastic's only at 53%. To me, that is really telling you a story of how can I put it? It tells you a story about both the reversal, the continuation of the weakness, and that 9-period exponential moving average as being really, really important at this particular, it always is important for me, but very important at this particular time. And there are a couple of reasons for that. And one of the reasons is that when I'm looking at this particular pattern of the V-shaped failure, right immediately in the back of my mind says, oh, there should be a pullback, and the pullback should be about 20 to maybe 30 or 40% in a V-shaped pattern. But when you combine it together with the MACD pulling back and the stochastic pulling back, that's different. That gives it almost the cup-shaped formation that says at any point, if you're pulling back from a test of the double top, just going back 1/3 is not a good sign, because as soon as as soon as a bounce fails, it'll make a lower low, and then you got to see 50% retracement, and then if it breaks 50%, there's really a good chance that it goes all the way back. And that says to me the low of just a little while ago, I think it was that Monday, that very ugly Monday, I think it was the Monday, you'd be looking at 16,046. So when I'm doing that, I'm saying to myself, whoa, in terms of risk reward, it's beginning to look more and more like the that the risk is increasing, even though you could see upside action, and that upside action, in fact, how can I put it? The upside action is telling you that a new high, a new all-time high, you've got to rethink it. So I'm in the process here of saying maybe there'll be a new all-time high. I see that possibility as being quite minimal at this particular point. And even more important than that is that if, in fact, there is an all-time high, it changes the weekly, it changes the monthly to your leg E, it changes the daily. And I'm seeing a great difficulty in the market being able to be able to get there. That's all. And that's in terms of the Dow. And then look what happened the other day. You've got the S&P making an all-time high. You have the IWM, the Qs, the IYC that we looked at, the cyclical index that we looked at before. None of that went to none of those indexes went to an all-time high. To me, that's just something that I have to be aware of. That is not a good sign. And I just wanted to do something here, if you don't mind. Okay, there you go. All right, now I'm all ready. And I want you to look at the IYT, which is the transportation index. 136.94 was the peak E high, and now I can put it down, arrow. Back on the, was that the 7th? No, that was earlier. I think that was the 4th. Let me just check. That was the 7th of March. And now you're making this H formation, and it says we have already broken the left side low. We have not closed under it. If the IYT, the iShares Dow Jones Transportation Average Index Fund, closes underneath 133.61, let's call it 133.50. If it closes under that, I'd have to say, not good action at all. And under those circumstances, it would start to say to me, watch that 132 to 133 level on the 9-period moving average support in the IYT. So far, it's just looking like a rectangle formation in the weekly, but that rectangle formation can go all the way down to 130. Got to watch this real closely. Now, here's something else that I wanted to do. I wanted to spend a little more time on the volatility index. The VIX has had a nice move up here. It's at 1581. Days young, looks to me like at any point they're going to keep trying to have these bounces. I wanted to show you, if I can, 120-minute, there it is. There's a 120-minute chart. This is a brand new leg A. So when I'm looking at this as a brand new leg A in the VIX, and if it holds in the 15, especially above 1550 at the close, that's important. I'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Andy Hecht will be hosting his first paid workshop on TFNN, the Techno-Mental Trading Method, which is taking place Friday, March 28th from noon till 3:30 Eastern Time. Relying on his decades of experience as a professional commodities trader for some of the largest and most well-respected firms in the business, Andy will be teaching for 3 full hours discussing the application of the technomentals he uses when trading commodities, futures, inter and intra-commodity spreads, commodity-related stocks, ETFs and ETNs, and related options, and much more. You'll receive an added bonus of a quick reference guide that Andy has put together for everyone that attends that breaks down the U.S. traded commodity-based ETF and ETN products available to you as a trader. The Techno-Mental Trading Method, Friday, March 28th from noon till 3:30 Eastern Time. This workshop will be archived so that if you can't attend live, you can view it whenever you'd like on demand for 30 days. For all the details and to reserve your spot today, visit the front page of TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi everyone, Basil Chapman. We are back. Dow's down 58, S&P's down 13. Pretty weak, but there should be some counter trend rally, and I would say that the IBs are ready for a bit of a bounce here. Maybe up to it's a 237.64, maybe up to 240. We tried to go long this morning, took a 3-point loss. Still holding core of the short position from way up there. There should be a bounce, and that's all I'm saying. And then I think we're going to make an H pattern and come back down again. Most importantly, we're looking at the volatility index, kind of stuck at 1580 right now. Made a high of 1607 and a low of 1456. 200-period moving average is going to be quite key. A close above that by the end of the day today, close above 1562, says, be careful. This is leg A. Could be possibly a peak A in the 120-minute chart. But most importantly, what I'm looking at is that in the daily chart, you're starting to see the technicals improving. That's not a good sign for the general market. It's improving as the market is starting to pull back. Now, what's really important to me is that if you're looking at the NYA, this is the New York Stock Exchange, the very broad New York Stock Exchange, that NYA went to a peak B on Friday. If it doesn't take out Friday's high, I can't see how it's going to do that, which could subsequently become an H pattern. Look at that, an H pattern. And that H pattern says, right there, I'm just keeping it a B. It's a gray B. meaning it is underneath the previous major high of 10,550. Let me put that in, 10,550, 10,550. And what's important about that 10,500, I'm going to make it red because I don't think we're going above it, not at this particular point. That weekly chart is exactly the same with that asymmetric triangle. No, it's a symmetric triangle. Yep, a symmetric triangle. And that says a break of the key support of 10,272, and you will be pulling back quite sharply. So here's what's even more important than that. When I'm looking at this particular market, right at this particular stage, I'm looking at it and saying, how come there is so much negativity on every sharp intraday reversal or single-day pullback from an almost all-time high? And that says to me that at some point what we're going to get is we're going to get a disbelief that we're going to be going down. And we're getting very close to that. We've used up a lot of the veracity of the correct decisions made by fund managers earlier in this year and going into the whole of last year and the year before, where every sharp pullback was a good opportunity to buy, especially the NASDAQ biotechs. So I'm saying to myself, okay, we're getting to a point where you've cried wolf so many times, no one will believe it. And I think we're right at the cusp of that, initiating that inverse psychology right now, where it's going to take a while for them to believe that, let me just look at my Dow Horseman, look at the GE. GE is not having a good day, but it's not actually such a bad day. It's unch at this time at 25.40, but it is starting to test the lower side of the 9-period exponential moving average. Look at IBM. IBM right now is up 133. Oh, made a new recovery high. Is that C or is that F? I'm going to call it F/C right now. The daily, that's all I can do, because the MACD is trying to cross positive, but the stochastic still only at 67. That could give you a little bit of a bounce. And look at Triple M. Triple M right now is down 64 cents, really struggling to make a new all-time high. The all-time high was 140.43. It's trading at 132.48. But the most recent high at peak D is really what will be the test, because if it closes above 135.20, that's a good sign. And Triple M, UTX, that's my real pilot light indicator for the intermediate term type action. Very poor action, down $1.30. Horrible spike on Friday and failure pattern. So all I can say is that in the conglomeration of looking at all these different key stocks that I use, using, say, the Netflixes, let's look at Google. Netflix is acting, whoa, Netflix is down 27. Now 378, peak E in the day, peak G in the weekly, peak E in the monthly. Google is down 25 at 1157, breaking the key support level. 1288.88 was the high, peak D. Peak E in the weekly, peak E in the monthly. Did I do Amazon? I just did Amazon. No, I didn't. Amazon is at also a peak D, a subsidiary peak, as it made the round number high. I believe it was either round number high or close. 408.06 was the high, all-time high. And 408 was the round number. It opened at 408 that day that it made the high. And it closed at a low. No, it made a low of 402. All those round numbers, two round numbers. And now what it's done is it's in a peak D. It's pulling back. 341 is my 200-period exponential moving average support. But 337 would get you close to testing the 337.73 low of the 5th of February, and 337.18 is the, let me just double check, is the 200-period. I thought it's a 200-period, not exponential, the 200-period simple moving average. And it's about to break the key support in the weekly chart. Let's look at this closer. So Amazon, great company, yet to really make profits, puts all the profits back again. And look at this. if Amazon, which is trading at 351 down 9, takes out the left side low of 343 made on the week of the 28th of February, it breaks that trend line. Facebook, a lot of people keep asking me about Facebook. Facebook is turned down. It's in leg C in the monthly, great chart, but it's in leg G/C in the weekly, peak G/C, and the monthly made a peak D top at 72.59. Ugly action. Ugly action. Wow. So I'd be real careful. Even Facebook is turning down. So that was it. And now I just wanted to, I haven't done this for a little while. I'm not sure if I've updated it. Let's look at the utilities. Utilities, have I got? Oh, I lost all that information. Let's go to the XLU. I have it there. XLU, yes. So the XLU is in leg C in the weekly chart. Had a brand new, I'm not sure if it's brand new, I'm going to have to check it out. Went to a peak D. The XLU is the utility ETF. This is the S&P Select Utility Spider Fund. And it went to, okay, I'm going to call this E/A. No, I just have to keep it. It's an E. There's no question. That's an E. That's an F. And then that is a rebound, and that is a G. I'll change it if it has to be changed. But this is definitely an F, an E, and an F right there. So you've got the utilities, E, F, and G. Got it. And I'll put a little hat there to say, I've got to be careful. Now, if the utility index, the utility ETF, is able to break above 4127, then the alternate count, I should still put that in no matter what. G, everything about it looks like a G, but I need to put G/C. Yep. G/C. So I don't yet have, until the utility ETF, the S&P Select Utility Spider Fund, breaks either above, closes above 40.91, which will say that it's going to retest the 41.27 level and probably make leg D, or it takes out a low of 40.04 that was made on the 20th. If it takes that out, it says it's going to test the bottom towards the 39 area. It is just stuck in a trading range. And it's almost like it's a safety factor because it's not doing very much, but it's not breaking down. So I'm watching that really closely. Here's the other thing. When I was going through charts this weekend, I looked at the XAR. The XAR is the Spider S&P Aerospace and Defense ETF. It's going to be really important in this particular ETF. It's down at $1.97, trading at 100.44. How it closes today, because if it closes down at 100 or under 101, especially if it closes under 100, that is starting to say that that weekly chart is deflecting lower in all categories technically. And that's not a good sign. And that says that the move up, if I can just find it here, I want to go to, let's go to Raytheon, RTN. Raytheon leg F/B in the monthly, great looking chart. Just a little toppy in both the RSI and the on-balance volume, but the monthly is not finished. The weekly is in a A, B, C, brand new. The only way I could count it, I believe, was a peak C at 102. I think it was a round number high. 102.15 was the round number. 102.15. Where was the round number high? All right, just get rid of that. 102.15, so that's a good sign there because it didn't make the round number. And the daily made a peak F top with round number 101 and 100. There's 102.10. That should have been 15. 102.15, and it opens at 101. And now it's pulling back sharply. And that's saying to me, we've got to be careful here when the leading sectors, I mean, we don't know how or why, but the defense sector was so strong and it was powering higher. So my overall contention is, let me just give it a quick summation here, is that this market is going to, the rotation correction is almost running out of steam. It is stopping the correct rotation, and now you're getting the very best sectors of all. The IBB, the biotech sector, which was just an amazing sector up, is just given major sell signals. The XAR, which is the aerospace and defense sector, that was unbelievable. And now it's been bouncing around, made the U-shape double top, I call it the drop bucket formation, broken down with a 1-to-1 to the downside in the daily, peak F. Weekly is, I got an alternate count here. This is also an unusual potential flat-based restart, A, B, C, D, E. I don't want to get too carried away. Let's just say that there's a good chance that it made a peak C1 and a C2 double top at 102.15. That, to me, is really important because the technicals are now turning down, haven't broken down, stochastic still at 82%, but this is the first 2 hours of the trading week. Look at LMT, Lockheed Martin. Made a leg F to the upside. It's now going to be a peak F if there's no new high this month, above 168.41. 168.41, let me just type that in. 168.41. The weekly has made a peak F top. The week a peak F top, and I have to actually put the down arrow. Well, the week is not finished. I'm probably going to have to put a down arrow there. And the daily has gone to, I'll tell you right now, A, B minus. Oh, it's one of those failure patterns. Doesn't happen very often. I have to call it a failure pattern. A, B minus. Wow, it could be nice if it was a C1, C2 minus. But it's a failure pattern, double top. I can't do anything about it. That's the daily. Very unusual to go to all-time highs and fail at a D. At a B. So I'm watching it, but the weekly is more powerful than the daily, and the monthly is more powerful than the weekly. So we're going to be watching this real closely. You know, when I go through these, look at Boeing. Boeing is part of that area. Boeing made a peak D in the weekly at 144.57, peak E in the monthly. And what we're looking at here is the daily made 144.57 peak E top and a 142 round number opening. These round numbers are lethal. You can pick them up. That's a great thing. So now let me do a couple of things that I want to do just before the next break. I wanted to also look at the XLF. A lot of talk about the financials. I have this as a potential F/A. I call it an A now in this particular part of the market. I just don't see how the financials are going to break out, start a new move to the upside in the daily. I think it's an F, but I'll give it the day and tomorrow. I'll give it a couple of days before I make a decision there. Most importantly, it's a leg E in the E/A in the weekly, but a break under 21.78, and it's at 22.31. I'm going to be safe. I'm going to say a weekly close under 21 would be very negative for the financials. And it's in leg, I've got this as a leg F in the monthly, right at that resistance we've been pinpointing for a long time. So I'm going to be watching the financials this week very, very closely. Two things are important. There's a break coming up. All right, well, two things are important. One is how the VIX closes today and how it holds up if it's going to. What kind of bounce, and together with that, what kind of bounce will you get in the IBB if you do get a bounce? And I think it's close. And then we'll be looking at the daily, weekly, monthly journals.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com. Eastern legend tells of a fair maiden who was offered a rare gift by the king of the land, a bag of pearls. The king promised that she could keep the largest, most perfect pearl she could find with these 3 conditions. 1, choose only 1 pearl. 2, remove 1 pearl at a time, accept or reject it. And 3, if rejected, it would be lost forever. She began by looking at the pearls, passing on many special treasures. She delved deeper into the bag, and soon the pearls were replaced with pebbles. Sadly, she went home empty-handed. Folks, replace pearls with time, because we cannot go back even 2 seconds. We live in the eternal moment of now. So when now are you going to take advantage of my offer to you, a subscription to my daily investment newsletter service, Mastering Probability, where you can experience the most incredible pearls for trading and investing, the Rhodes Momentum Indicator and Strategy. The offer? It gets better. A 30-day money-back guarantee. Don't go home empty-handed. Mastering Probability. Available on the homepage of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi everyone, we're back. Dow's trying to rebalance, down 51, and having been quite a bit higher and quite a bit lower. Now it's down 51, S&P's down 13, and this is I mentioned to my subscribers of my opening call that Friday was probably one of the most important sessions that we've had for quite a while. The amount of information that it was imparting, by the fact that the S&P went to new highs but the other indexes didn't. The amount of information it was imparted by rallying in the options options expiration, but rallying and then failing very badly. The amount of information that it was imparting by saying that such and such happened on Friday. But if I am very weak on Monday, that's the overall market, that's going to say, whoa, we are now into that area that says be careful, because in bear phases, I'd call this rotational up until now, but in a bear phase, coming off the top, if you start to see sharp sell-offs on any bit of news and closes that are very negative, closing towards or at the low of the day, that says trend change, you're going to low tide, you're finished going to high tide, watch out, and that's really what I'm looking at here. Very important. Now we've got a couple of things. When I looked, I said that I'd look at in the final section of today's Tiger Technicians Hour. The XAL has done nothing much. It's stuck in a little trading range in a rectangle. but I can just tell you that this ARCA airline index, leg F, I've got at least, it could be an alternate count, but for now I'm calling it F in the monthly. And a G/C at almost 79.88, 79.78, 79. It almost went to peak D. This is like a C1, C2. In the weekly, I can't do anything just yet, although we are short in airline stock. I'm looking at this and I'm saying, wait a minute, you failed over there. You're stuck in this little trading range right now. Yes, you could make that oval pattern, but the airline index has had such a huge move to the upside. It needs time. So just on that basis alone, it needs time. But on a purely technical basis, you're making higher highs with much weaker technicals in the daily and also in the stochastic of the weekly. I'm watching this real closely. I'll tell you why. A close below 76 on the, it's at 77.11 right now, down 54 cents. A close on the XAL index and that, under 76 on the daily charts is, ooh, watch that weekly because 75.80 is the 9-period moving average. So on Friday, if the XAL closes under 75, that's going to be very negative. Now, a real quick question, and I'll deal with it right now. The Dow daily is gone to a peak F. It tried to recover on Friday, it couldn't make it, and it's fading today. If it closes decisively under 16,170 in the next day or two, without taking out today's high of 16,380, no, I'm going to be a little more careful. Without taking the high of 16,456 high out this week, that's going to be very negative. And the weekly is making this cluster pattern up at the top that says, watch out, same parameters apply to the weekly. Monthly, I don't even want to talk about. We're not even close to the end of the month. S&P index, SPX.X, and the S&P right now, this is an ugly candle. This is going to be a peak E. In fact, I don't want to do it yet. The day's not done. If you're looking at a daily candle, have patience, wait for the end of the day. That daily candle says if the high of 1883.97 is not taken out this week, be careful, because a close under the low of the 14th of March under 1839, whoa, that's going to be very negative, and that'll combine with the weekly. Now, the weekly chart, I don't want to talk about what I am in the weekly chart in the letters. I've got a leg B. That says you could pull back very sharply, but I'm going to wait till Friday before I make that decision. The final one was the Qs. The Qs are not acting very well. Stay tuned. Larry Pesofento is back. We're thrilled to have him back. Welcome back, Larry. And I will see you tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.